Hi, I'm Patu from freefincal, and in this video, I want to take you through a tour of the freefincal equity mutual fund performance screener, how the actual screener is created every month. So this is the actual screener file that you'll see when you get the screener. The screener costs rupees 111 each month, and this is what you'll get. I have another video on how to use the screener, how to screen for mutual funds, how to get a short list of the most consistent performers for a particular category or against a particular benchmark. So you can refer to that video. A couple of days ago, I had showed you a simple way to screen for mutual fund that beginners can use. So this is that's actually for one particular interval, last 3, 5, and 10 years. This is for every possible last 3, 5, and 10 years. So this is much more comprehensive. So I want to take you through this tour. So let me go to this file. I'll have to because I'm using the file, I can't have the image of my image there. So this file is essentially will look like the rolling return uh, sheet that is available for free, that you can use it for any particular mutual fund you can use. This is essentially built so that you can use it for all possible funds. So this button here, so let me just take this out there. So this button here is the batch analyze button. All these buttons are available for every user. These are all available in the free version. Sorry, this is the batch analyze version that I've used for creating the screener. So the first thing that I do is to have set up this list. This is a list of all the funds that I'm going to run the screener for. The fund name, the AMFI code, the AMC code, as per AMFI, this is the benchmark that's going to be used, and this is the type of fund. So you can see here, this time I have used about 337. I've used screen for 337 mutual funds. And before I run the screener, what I do is, so Nifty 100 TRI, Nifty mid cap 150 TRI, Nifty large mid cap 250 TRI, all this, the updated data for the last month, since the last time I ran the screener, I get the data and place it in those sheets here that you see for every individual benchmark. So I first create that history that's available, updated history is available, and then I take one fund, check for how well it has performed against the benchmark for 1 year to every possible 1 year, 2 year, 3 year, 4 year, and 5 year periods in the past, and then output the results. So the first thing I do is, so I take one fund, so it iterates out. So let's say I take this Aditya Birla Sun Life Equity Hybrid Fund, and then the first thing I do is I take the fund NAV and the benchmark NAV, and I make sure that all the dates are common. Sometimes what happens is the fund history will have, let's say, 300 records, 300 date records. The benchmark history may have 295 or 305, something like that, something different. So I make sure that all the dates in the are exactly the same. So this matching is first done, and then I push it through the capture ratio analysis sheet, and in this sheet we calculate the monthly returns, and then I find out how did the fund behave whenever the index monthly return was positive, and how did the fund behave when the index monthly return was negative. So for the in the former case, that is when the index monthly return was positive, I calculate what is known as the upside performance, and in the case when the index monthly return was negative, I calculate what is known as the downside protection, and I then go on to calculate how consistent the downside protection is, how consistent the upside performance is. So once that is done, then I take the this fund NAV and the index price history. I take them and push it through the my rolling return calculator for the fund and the benchmark. This is essentially the same that you will see in the free version. So this I push it through, and then there's the analysis done. So the advantage of making sure the dates are the same is that you calculate the monthly returns for exactly the same dates, between the same dates, and also the number of rolling returns for the fund and the benchmark will be exactly the same. There will be no mismatch, and out of this, let's say, total number of I forget the number of entries, so it's not here. It's not shown properly here. So let's say there are 1,000 rolling return entries of the index. Then I calculate how many out of those 1,000 has the fund bet the index, and then that gives me its consistency. Then I collate all this data, the returns comparison, the downside protection, the upside performance. I collate all the data and then push it into the results page. So this is the results page. This is a huge page. So you can actually see it's a very large page. I do it for 1 month, 1 year, 2 year, 3 year, 4 year, and then it keeps going 5 years. Then I calculate standard deviation for the last 5 years, return for the last 5 years, 1 year, 2 year, 3 year, 4 year, and 5 years, and so on. All this data is compiled, and from this data I actually take and do a little bit of post processing and create the screener sheet. So you have in this is the macro screener, and the macro version of the screener. I also offer a plain data version. You can upload it into Google Sheets and use it for your own analysis. So you can here, this should work. I hope I have the macro enabled. Suppose I click this, and then it will, so I choose aggressive hybrid funds, and you can go on to screen it. So I can show you the number of just the entries for people who have not seen the video, the previous screening video. So you can see here, this is the number of 1 year returns computed for the fund and the index. They'll both be the same. Number of times the fund has outperformed 600. So the fund, this fund, Franklin India Equity Hybrid, that's Franklin Balance Fund, I think, that has outperformed the Nifty 100 656 times out of 1346. That's a consistency of about 50%. And typically, whenever the index moved up, the fund has moved up not often. It has moved up only with 18% consistency, but with 67% consistency, it has protect the investors from risk. That is, whenever the index fell, whenever the benchmark fell, the fund itself did not fall as much, and that's typically about more than half the times that has been the 67% of the times it's been the case. So that's what you see here, and then you see this for 2 years, 3 years. As the color changes, the year changes. 4 years and 5 years. You can use this for screening. Then there is a 25% outperformance. The same data as before is presented, but I also show the number of times the fund has outperformed by 25% and underperformed by 25%. This can tell you whether there has been large departures. If suppose the fund is underperformed by 25%, a very large number of times, then you don't want that kind of a fund, right? So that's the idea. And then this is the performance in the last year, last 1 year, 2 year, 3 years. So in the sense that again, it's a 1, 2, 3, 4, 5 year data, but it is just the last just the last year the last 1 year, the last 2 years, last 3 years, and last 4 years. So that's essentially how that sheet. And then here I have the risk return calculator. So I have the trailing 1 year, 2 year, 3 year, 4 year, and 5 year returns, and also the trailing standard deviation. You can use this to screen for funds that has bet the benchmark at lower risk. I have another video for this, I think, or I have this in the screener video. You can check that in the screener video. I don't want to get into details of how to screen again here. I don't want to repeat myself here. So this is what you get when you buy the screener. It's rupees 111 every month. I try to publish it every month. Many readers have asked me, why don't you have an offer for 1 year and so on? I can't do that because sometimes what happens, suddenly if these data providers revoke their access, they change their access, then it's very difficult for me to run a macro like this. That is, then I can't commit to something like that I will offer this for next 15 months or 12 months or something like that, and then renege on that. I don't want to do that. So that's the reason why it's on a monthly basis. Give this screener a try if you're interested, and let me know if you have any feedback. I'll catch you later. Bye bye.